Welcome back to another episode of the End of Day Report with yours truly, Dex, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we place right in your hands each and every trading day. Hopefully, everyone is doing good out there. Hopefully, you got it going on. You're enjoying life and living it to the fullest and all that other good radical stuff. All right, so here's what we got going on this evening. As you know, end of day reports are special come Thursday night because tomorrow is Take Back Friday. That's right, tomorrow is Take Back Friday. Normally, what that means, if the market's been up all week, you can expect it to be down on Friday due to profit taking. Likewise, if the market's been down all week, you can expect a little pop up as profit taking is occurring. Now, this is not always the case, but more times out of none, then it's going to be the case. All right, people like to take profit. People like to go out drinking and partying and smoking and carrying on the weekends. That's just what people like to do. So, with that being said, we like to cover the gamut here and give people what it is so they can know what to look for with tomorrow's intraday price inflection points. For more on what that is and how to utilize that tool, you're going to want to go to pulsewavetrading.com and you can learn all about that along with our famous POP method, which is the methodology that we use for legging in and out of positions and managing open trades, open positions, and knowing when and how to take profits. All right, and you can learn all that and more at pulsewavetrading.com. And thank you in the live chat, IT, with that donation. That's what's up. That's what's up, man. Much appreciated. Much appreciated. All right, so before we get started, I think I need to share my screen. I always seem to forget to do that at times. My bad. All right, but we're not going to make that mistake today. See, I'm on it. I'm on it. I'm on it. All right, let's get it crack-a-lacking. So, first and foremost, the first chart we got up here right now is the E-mini S&P 500. Let's get this one on. Okay, you can see it. S&P 500. So, we came into today with a crash alert that we got. And you can see we got that downside production today. Then the market kind of reversed back again because it is at a crossroads. And we're getting another a secondary crash alert out of this. So trend line support is what we're looking for. A close above 33.69 and a quarter is needed to maintain a bullish perspective. Anything below that would be bearish going into next week. Taking a look now at the Dow futures. So as you can see here, we had this crash alert, and pretty much just about every day we've been getting some type of downside production. Trend line support down here around the 26.5 handle is what we're looking for as our initial target. As long as the market stays above 27,663, it remains in the bull camp. Anything below that, and this thing turns bearish with bearish momentum behind it, which can be a deadly tool. All right, so we got the Australian dollar up here next. You can see we got the back-to-back crash alerts with downside production coming into play. Trend line support here is the initial target. As long as the market stays below 71.92, this market remains in a bearish perspective in the bear camp. Anything above that would be bullish. Moving right along to the Canadian dollar. So the Canadian dollar had a rally alert coming into today. We got just a little bit of slight upside production before a little reversal here. Trend line resistance over top is the initial target. This market, in order to put in a short-term bottom, needs to close above 132.13 tomorrow. If it can do that, then we put in a short-term bottom, and then we're going to track back up here to this overhead resistance. Failure to do so, though, would open the door to probably a sell signal either tomorrow or Sunday night or what have you. So we'll see. All right, looking here at the U.S. dollar index. So the U.S. dollar index has been very weak We came into the day with a rally alert, got a little bit of upside production before an intraday reversal. The trend line resistance is the initial target for this one. What does this need to do to put in a short-term bottom? Just needs to close above 92.87. A close above 92.87 puts in a short-term bottom for the US dollar. Next chart up we have here is the euro dollar. All right, and we have a crash alert for tonight into tomorrow's trading, with the trend line support being the initial target. This one really has been trying to stay suspended in animation. So who knows what this thing is finally going to do, or which way it's going to break. But for right now, it does look like the bears have the slight edge. As long as the euro can stay above 118.54, then this one will remain bullish. All right, but anything below that would be a bearish outlook for next week for the euro dollar. All right, next up we have the euro yen. So we started off with a crash alert for the week, and the market's been giving us downside production ever since. Trendline support is the initial target. As long as this market closes below 125.65, it remains in the bear camp. Looking at the pound sterling. So the pound sterling also came into the day with a crash alert. We got just a smidgen of downside production before an intraday reversal. As long as this market stays above 131.38, then it remains in a bullish perspective. Anything below that, though, would reopen that door to the trend line support being in play. Right now, it's trying to reverse and give us another buy signal. We'll see how that plays out. All right, dollar yen right now. So dollar yen had a secondary crash alert, got a slight bit of production, intraday reversal, then it came back down. It's on its way back down again. So this one, man, like I said, there's really no floor. This thing can really start to accelerate to the downside if it gets a good dose of momentum behind it. But for right now, it's trying to keep the rally perspective in play. But this is a corrective market. What has to happen? Market needs to close above 105.99 in order to close the door on the bears. Failure to do so, I'm afraid we're going to see some sell-off next week. Mexican peso. So we have this rally alert. We started getting some upside production, getting right near that initial target of the overhead trend line resistance. So right now, as long as this market stays above 22.1663, then this thing is going to remain bearish. As long as it stays below that, it stays bearish. But if it gets above that, then we put in a short-term bottom. Next on the line, we got natural gas futures. So we have a crash alert for tonight into tomorrow's trading, with the trend line support around the $2 mark as the initial target. So that's what we're looking at here. As long as the market stays above $2.35, though, it remains in the bull camp. Close below it, and we put in a short-term top. Gold futures. Okay, so as you know, gold had that nice correction last week, and then we've rallied back from there. And now we had the crash alert. We didn't get any production, and now we switched back to a rally alert for tomorrow. All right, so I think the market's going to try to get back to 2,000 one more time. Looks like the market is having problems staying above 2,000, though, having some issues. What do we need to see? Well, as long as this market can close above 1967 tomorrow, then it opens the door for further rallying into next week. But failure to do so does open the door to further correction. Looking at the Kiwi here. All right, so we have a crash alert for tonight into tomorrow's trading on the Kiwi. If the market closes below 65.62, then you have the door open for more selling for next week. Looking at the South African Rand. So we have the crash alerts here. We've been getting some downside production. What do we need to see for a short-term bottom? We need to see a close tomorrow above 17.3357. All right, a close above that puts in a short-term bottom. Failure to do so, well, more selling is on the way. All right, looking at the Australian dollar, we have a rally alert for tonight into tomorrow's trading. Because of this beginning stage of a bearish weekly trend momentum reading, the upside could be limited, so you may have to take profits quickly if we get production tonight into tomorrow. As long as this market can close above 1345, I do believe that the bullish perspective remains alive. Looking at Bitcoins, I'm sorry, not Bitcoin, but altcoins. Looking at Bitcoin Cash, ABC, we have a rally alert for tonight into tomorrow's trading on this one. As long as the market can close above 298.86, well, then you're going to put that short-term bottom in and open the door for further rallying into next week. But failure to get there and close above it is going to be a problem. All right, looking at the mighty Bitcoin now. Bitcoin has a rally alert for tonight into tomorrow's trading. As long as the market can close above 11,842.71, this will remain in the bull camp. A close below it, though, puts in a short-term top for the Bitcoin. All right, going over to Ethereum now. All right, so Ethereum has a rally alert for tonight into tomorrow's trading. As long as the market can close above 413.49, it will be bullish. A close below that, though, it will be bearish. Now, just for those that don't know, all right, a Friday for cryptos starts Thursday night at 6 p.m. Eastern Standard Time and runs all the way to Sunday night at 6 p.m. Eastern Standard New York time. All right. Now, Litecoin has a rally alert for tonight into tomorrow's trading. What do we need to see? A close above 62.3113 keeps the market in a bullish perspective. All right, moving to VET. VET. What do we have to say for the VET? I don't know if that's a real tick or not. Let me take a look. Bear with me just for a second. I think that might be an error. Let me just double check right quick. I think we might have an error. Let's see here. Yep. I think we got ourselves an error. Let's see. VET. All right. And this is USD. Okay, VET USD. Yep. Okay. All right. Give me a second. All right, so I just fixed that. All right, so VET has a rally alert for tonight into tomorrow's trading. I think it could get back up here around that 22 handle, so we'll see about that. All right, as long as this market can close above 0.0190, we should be in the game with no issues. No issues on that one. Okay, moving forward, we got, let's see, XRP. All right, so XRP has a rally alert for tonight into tomorrow's trading. As long as the market can close above 0.2964, you should be good to go. Closes below that, however, is bearish. All right, looking at ZRX. ZRX here has a rally alert for tonight into tomorrow's trading. What do you need to do to put in a short-term bottom? Well, you need to close above 0.5563. Anything below that is bearish. Anything above that is bullish. All right, taking a look now at the NASDAQ 100 futures. So we've been getting upside production from the rally alert. Market's moving nicely here. What do we need to do? Stay in the bull camp. The market needs to close above 11,296 and a quarter. Anything below that would be bearish. Moving right along to the crude oil futures. All right, so finally, look, got a little downside production from the crash alert. What do you know? All right, as long as this market stays below $42.51 a barrel, it's bearish. Anything above that, though, would keep it a bullish outlook. Russell My Hustle futures. All right, so we had this crash alert. Got a little bit of downside production today with another crash alert for tonight into tomorrow's trading. If the market closes below 1570.7, then guess what? We stay in the bear camp, ladies and gentlemen. All right, looking at silver. Silver futures has a rally alert for tonight into tomorrow's trading. This one hasn't been able to make its mind up, back and forth, back and forth, back and forth. Therefore, if the market closes tomorrow above $27.16, it remains in the bull camp. Close below it, and the bear objective starts to come into play. All right, so corn had a crash alert, and we've got this nice downside production for the last couple of days here. What needs to happen? All right, if this market closes below if it closes below 338 and a quarter, then it will open the door for more bearishness for next week. But close above it, and you may have yourself a support and a base for a rally. Taking a look now at soybean futures. Soybean futures had a crash alert. We got nice downside production finally on that one. Trendline support is the initial target. A close below 906 and a half is a bearish one. All right, keep that in mind. All right, and lastly, we have wheat. Looking at wheat. All right, so wheat had that rally alert, as you can see here, followed by a secondary one. Got a little bit of upside production here. So, so from the initial rally alert, we've gotten really nice upside production. But we're right here at the bottom of the Kumo cloud. We're going to find some resistance. What needs to happen? Well, as long as this market can close above 508 and 3/4 tomorrow, then the bull camp is still intact with the bullish weekly trend momentum reading behind it. All right, that's what's up, man. That's what's up. That's what's up. All right, yeah, you guys know you gotta smash that like button, man. Come on now, you know how we ride up in here. I know y'all was making all that Skrilla this week off of these rally and crash alerts. You ain't kidding nobody. I know what time it is. I know our subscribers are eating good off of these markets. And look, here's the thing. I want to pull something up. I want to help out a couple of people in the trading room real quick. I try to answer as many people's questions with one example. So that's what we're going to do right here. This should help everybody. And this, when I do these examples, unless I say otherwise, it's for every market. All right. Some markets have little unique qualities about them, but for the most part, trading is still trading. All right, right here, this is Facebook, the stock Facebook. What Facebook has taught us is that you can't fight the trend. So this is a bull market, and it's just continually acting like a bull in a bull market with a couple of pullbacks along the way. You had this one here. You had this one here. Here, sharp one here. Here, little one here, and now you're going up again. What you probably want to do, remember, options traders are, you have a little bit more obstacles to overcome than straight equity trading, because you have to time your stuff by the the way the options markets are flowing. What you may want to do is, if you use the Thinkorswim platform, there are conditional order types, and then you can call the trade desk, the equity trade desk, and they will actually help you, set that up and show you how to do it. So, for instance, let's say you wanted to, let's say Facebook is trading at $250 a share, but you see a pullback coming. You think it may pull back to maybe 220, and you want to buy it when it gets down to 220. You want to buy a call option. You want to buy a 220 call when it gets to 220. There's a conditional order type in the Thinkorswim. that you can put it in and say, okay, buy me the 220 Facebook call at the market when the market reaches 220. When the stock price reaches 220, buy me the 220 call at the market. You can do that. You can do that. So like in this example here, had you when the market got down here, it hit 207.10. Let's say you say, you know what, buy me the 207 call right now at the market, right? And let's say you paid the highest premium for it for that day. Let's just say you did that. You don't care because you know what? Look what happened. The market rose and came roaring right back, and you got all the way up here to 247. So you made a nice profit by doing it like that. Okay. There's nothing wrong with using the tools that are at your disposal with the Thinkorswim platform. They allow you to do conditional orders like that. You know, buy this put if the stock price hits this price, buy me this strike price put at the market. Boom. It will do that for you. All right. And if you say buy me market, it's going to give you, you're going to get filled. Whatever the ask is at that time, that's what you're going to get filled at. And you're cool. That's how you do that. Instead of trying to guess, I would read the report on the PulseWave, and whatever the report says, use that. Whatever the intraday price inflection point is, use that. Do it just like that. All right. And you can do a conditional order for those intraday price inflection points. If market does this, then do this. All right. Those tools are very important and very good. I use those tools. All right. I always use for me, I normally use the OCO orders. Like if I get filled on my order to buy Facebook at $220 a share, then I want you to place a stop loss for me as an open order. I want you to put a stop in the market for me at 210. So if and when I'm filled at 220, Thinkorswim will automatically put my stop in for me. So if I have to, leave, and for those of you that have jobs, if you have to leave and go to work or whatever you got to do, you can go handle your business and your stops in the market for you. So you don't have to worry about, oh no, the market's moving against me and I don't have a stop in, and oh, I left my cell phone somewhere, I can't get out of the market. Oh my goodness. See what I'm saying? That's why you do that. So those are good tools to learn how to use, the OCO orders and the advanced conditional type orders that the Thinkorswim platform does offer you. And if you need help on those, call the trade desk. They have people that are paid and trained to do that. They will be on the phone with you and they will show you what to do. They will even do the screen share thing with you, and they can get you up and running. Okay. I just want to throw that out there for you guys. Okay. So in the situation with the Facebook, we know about, like, a lot of these stocks, we know what's going on. All right. They don't have to have any profits. It could be a fake company. It could be whatever you want to fill in the blank. I would take that and I would ride with that. If this market wants to be in a bull market like this, see, it's in a bull, see the little bull. If it wants to keep going up, then fine. Just keep buying calls and taking profit. When it's ready to break, buy puts and then take profit. The market doesn't have to make sense. The market can remain more irrational for longer than you can remain solvent. So when you see these things happening, just go with it. Just trade what you see. I don't care if Facebook, we find out, is a fake company and Mark Zuckerberg is an android and not a real person and never existed. Whatever. Okay. Just follow the market, man. Just follow the market. So I can't stress that enough. All right. Follow the market. I'm encouraging everybody right now. Just follow the market and read the reports. That's what they're there for. All right. It tells you what you're looking for. It tells you what to do if the market does this. If the market falls, this is what you should do. If the market rallies, this is what you should do. If you're on the sidelines and you're watching it, here's the intraday price inflection point. This is what you should do. Wait for the market to fall to this price before you buy it. Wait for the market to rise to this price before you sell it. Or wait till the market rises to this price before you buy it, and wait till the market falls to this price before you sell it. It gives you everything you need to know and answers every question that you may have. So I just want to encourage everyone with that, okay? So these tools are here for you to utilize them joints. You know what I'm saying? All right, and then with that being said, y'all know what it is, man. PulseWaveTrading.com. Tomorrow is Take Back Friday. Now you are prepared for whatever may happen because I just hooked you up. You got all the price inflection points and you know what's what. And all you got to do is trade what you see. Follow the reports. Don't try to outguess the market, second guess the market. And don't try to outthink the system because you will hurt yourself. Don't do it. Just follow the rules, follow the system, and you're going to be all right. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. Peace.